Following the implementation of the Retail Distribution Review, there are now new requirements on the standard of independent advice for personal recommendations to retail clients. This advice must include a comprehensive and fair analysis of the relevant market and be unbiased and unrestricted. The relevant market is defined as all retail investment products which are capable of meeting the needs and objectives of the client. There are now a number of investment vehicles covered by this wide definition of retail investment products that were not covered under the previous packaged products terminology, so advisors will need to increase their understanding on how these new requirements must be applied. One of the most notable investment vehicles that will now be covered under the definition of retail investment products are exchange-traded funds. ETFs are a growing investment channel and are commonly credited with benefits including diversification, efficiency in access, cost-effectiveness and transparency. BlackRock are one of our key strategic partners and are experts in exchange-traded funds and the owner of the largest provider of ETFs, iShares. With the support of Pollyanna Harper from BlackRock, this CPD module will aim to provide advisors with a greater understanding of ETFs, give advisors a greater understanding of where to buy ETFs, highlight the difference between index trackers and ETFs, give clarity on how to use ETFs as part of an advisor's financial planning process, give advisors greater understanding of the Tenet approach on advising on ETFs. Pollyanna is Head of Intermediary Sales for iShares UK. She's responsible for the distribution of iShares to stockbrokers, discretionary managers and financial advisors across the UK. Pollyanna's service with the firm dates back to 2005, including her years with Barclays Global Investors, which merged with BlackRock in 2009. Pollyanna holds a BA Honours in French and German and International Business and the Investment Management Certificate IMC.
So what are ETFs? Let's take a look at this slide, what exactly an ETF is. There are really two great investment ideas brought together. The structure of a normal index mutual fund with the benefits of trading like a stock. So you have the advantage of being able to get in and out quickly. The aim is to track the performance of a particular index, and it's an open-ended investment company. To deliver the return, the ETF provider manages the fund by buying the underlying constituents of the index. This is known as physical replication. Another way for an ETF provider to return the performance of the particular index is to use a synthetic swap structure. This is known as derivative replication. In this session, we're going to focus on the physical replicating structure. So let's take a look at the slide here. We're looking at the physical-based exchange-traded funds. On the far side, you can see the portfolio managers purchase the stocks that represent the index, in this case the FTSE 100, and you can see a snapshot of the top 10 holdings, BP, Vodafone and so on. The portfolio managers will buy all of the stocks that represent that index and hold them in accordance to the weightings on the index, and then they're wrapped into an exchange-traded fund. It's important to note with physical-based ETFs, the assets are held in ring-fenced accounts and segregated from the asset manager. In the case of iShares, this is BlackRock. Another slide that I'd like to look at here is, can advisors advise on exchange-traded funds? Very simply, the answer is absolutely yes. Advisors authorised by the FSA to advise on investments are authorised to advise on exchange-traded funds. You can see a snapshot here of a document that we put together with all of the detail for your FSA folder. So in summary, ETFs are very similar to index trackers, with the option to trade more frequently. Think about the following questions. Does the product give you the right exposure to the market that you're wanting to track? Does the product pay out dividends or reinvest its dividends? How frequently does the fund rebalance? And finally, do you understand the structure and any embedded risks? So how can you buy exchange-traded funds? First of all, we're going to look at the slide here, looking at the wraps and platforms where iShares ETFs are available. This slide details the major wrap platforms. When you're looking to purchase ETFs via a platform, there are some key considerations. First of all, do you understand the platform charges for your ETF investment? Make sure that those charges are also added into your total cost of ownership. How does the platform deal? Does the platform offer intraday dealing or daily dealing? It's important to know the difference between the two. And do these charges meet your requirements for clients with regular contributions and also rebalancing your portfolio? Does the platform offer the ability to reinvest its dividends earned by iShares ETFs? It's also important to make sure Tenet advisors should also check the approved platform panel. So we're looking at the difference between an ETF and an index tracker. Let's take a look at the slide here. You've got the green side looking at exchange-traded funds and the blue side looking at traditional index trackers. The fundamental difference is that an ETF can be bought and sold on a stock exchange, while traditional index tracker funds can only be purchased or redeemed according to the dealing cycle set by the fund manager, and typically this is once a day. Both indexing vehicles, ETFs and traditional index mutual funds share the benefits of simplicity, transparency and cost effectiveness. Simplicity in terms of buying a market or a particular exposure for your fund to track it exactly, less costs. Transparency in terms of knowing exactly what you own. If you go back to the previous slide that I talked about looking at the physical base structure, you can see the whole portfolio that you're owning, not just for the FTSE 100 ETF, but any of the other ETFs that you're buying. And finally, cost effectiveness, keeping your overall portfolio at a low cost. With ETFs, you also have a very wide range of asset classes to pick and choose from. Let's take a look at this slide to see exactly what's out there. You've got 5 main asset classes to look at: equities, fixed income, alternatives, commodities, and cash equivalents. Taking a look at equities, you can break this down from global into developed markets and emerging markets, but also looking at style and sector, so large mid-cap biases, also looking at growth and value, including higher dividend paying products. On the fixed income side, whether it be breaking it down into particular maturity buckets, emerging markets, corporate bonds or inflation links, you have a whole variety to pick and choose from. Moving into alternatives, anything from property, real estate investment trusts, private equity and infrastructure, and then into commodities, so looking at baskets of commodities or single commodities giving you exposure to precious metal, for example, gold, silver, platinum and palladium. And then on the cash equivalents, short-term treasuries, for example. So in summary for this section, think about which markets and asset classes you should be looking at to include in your portfolio. Is it going to be a core or a niche exposure? Once you know the answer to this should help you determine which vehicle to use, whether it be an index tracker or an ETF. Also, the cost of an ETF is important, but there are other considerations. I mentioned the platform charges previously. Performance and tracking difference between the fund and its benchmark index. Very important to make sure the actual fund is performing how it should be and tracking very tightly with that market that you want to gain exposure to. And finally, the index methodology. It's important to know what the index is doing, how frequently it's rebalancing, for example. ETFs and index trackers can be complementary. It isn't a question of one versus the other. So now let's look at how we could use ETFs within your portfolio. Firstly, I want to look at this slide here, looking at the market barbell. On one hand, you have real alpha players, the active managers who are consistently outperforming, and you're paying for that. And then on the far side, you're looking at passive investment tools, the real beta players who are going to give you market exposure at transparent, low costs. The mediocre middle is probably where we see this is going to fade away, and you're going to see a shift towards either end of the market. We feel the debate has moved on now from passive versus active to blending active and passive strategies. So let's take a look at this slide here, implementing core satellite exposures. Here you can see ETFs in the core. In the core, passively managed vehicles such as ETFs or index pooled funds lend themselves to core components of an investment portfolio, offering, as I mentioned before, low cost and ease of access. In the satellite, typically you'll see more specialised investment tools which aim to deliver additional returns such as alpha. In the diagram below, you can see a core portfolio. This could be all active or a blend dependent on your overall strategy. It might be the case that this strategy worked for you and has worked for you for a number of years and therefore you want to stick with it. In this case, therefore, you might want to put in the satellite ETFs. These could be used in place of active managers where you might not be able to find a manager with consistent performance for that particular exposure. Therefore, putting an ETF to work to gain access to that market could be the best option. So in summary for this section, we do feel that investors are embracing blending strategies, using ETFs, index funds and active funds together to build the most efficient portfolios. ETFs offer a wide range of exposures and can be used as a flexible tool in your portfolio. So at iShares, what support is available to you as advisors? Let's take a look at some of the tools and due diligence resources available to you. Firstly, on our website, iShares.co.uk, you can see the performance chart. This allows you to examine exactly how the iShares ETF is following its benchmark and breaking it down into particular asset classes. Then you have the index returns chart. What you can see here is more than 150 worldwide indices. You can track your own favourite benchmarks by using My Benchmarks. Moving on to more documentation style resources, for you we have recently put together our Advisor Toolkit. This gives you 6 key areas to consider, looking at an advisor guide to ETFs and then into, for your clients, what investors need to be thinking about and making it easier for you to talk to your clients about exchange-traded funds. Finally, and probably one of the most sought-after tools that we have on our website now is the Downloading Your ETP, Exchange Traded Product tool. What this allows you to do is, on request, ask iShares for a particular fund piece of information. What we'll do is we'll put together a document, non-branded and specific for you as an advisor. It'll be a report with all of the questions that you need to consider in terms of what ETF due diligence you should be thinking about. and we'll answer all of those and send it over to you.
Tenet has created an ETF panel which was recently published on the 1st of February 2013. This panel has been constructed following a comprehensive due diligence process. All appointed representatives must adhere to these panels and need to follow the off-panel process for using non-panelled propositions. Tenet Select advisors can get access to these by signing up to the core research package. Tenet's Financial Planning Services issued guidance on ETFs on the 1st of February 2013 to support the launch of the ETF panel. As with any other personal recommendation of a retail investment product, the regulator expects advisors to have conducted sufficient due diligence to be able to demonstrate that the selected proposition is an appropriate way of meeting the client needs. Tenet's Financial Services guidance provides an overview of the key factors to consider as part of this due diligence process. I hope you found this session useful. Thank you very much for watching.